guys, welcome to my channel. My name is Nkuna Esther and welcome to Finance by S, and I'm so glad to have you back in the channel. Please subscribe and put on the notification bell. It's a way of motivating me to always bring you such empowering information. Thank you so much for being here. So let's get straight to the video. If you're in Kenya, you know that the Kenyan shilling has been losing its value. It's been falling against the US dollar. If you've been investing in Kenya denominated assets, you definitely know that there's that foreign exchange loss. So to hedge your portfolio against that foreign exchange loss, you need to have some investments in US dollars. Okay, in today's video I'm teaching you about dollar funds, and I will start with the definition. So a dollar fund is a unit trust where investors invest in USD. Okay, and the fund manager of the unit trust invests now this money mainly in dollar denominated assets. So the difference between a dollar fund and a Kenyan unit trust is that you have to convert your Kenya shillings into dollars to be able to invest into a dollar fund. And like in a Kenyan unit trust where you invest directly for the USD, for the dollar fund, you have to convert your money into USD in order to, and by USD I mean US dollar, into USD in order to now invest in the unit trust. So we have different types of dollar funds depending on where the fund manager invests this pool of funds. And the first one is we have a dollar equity fund, we have a dollar fixed income fund, we have a dollar, why am I repeating the word dollar? So the first one is we have a dollar equity fund, and this one will invest in equities or shares or stocks. The second one is a dollar fixed income fund. This one invests in loans or bonds, both government bonds and bills, and also corporate bonds. We have a balanced fund, a dollar balanced fund, and this one will balance between investing in equities and also in bonds. Then we have a dollar money market fund, and this one invests in money market instruments such as commercial papers, fixed and call deposits with banks, which are very low risk in order to preserve the capital. So in today's video, I'm going to be talking about dollar funds as an umbrella that is including both dollar money market funds and fixed income dollar funds and also equity funds. But where I need to specify, I will specify. So let's now move on to the advantages of dollar funds. And the first thing is that they protect you from a depreciating Kenya shilling. The second advantage of dollar funds is that they offer you market diversification. The dollar funds will not only invest in the Kenyan market instruments, but they will also invest in offshore market instruments. So at a time like this, especially where the Kenyan stock market is not doing well, dollar funds will invest in markets, offshore, that are actually bullish, that are performing well. So you find that your money is not only exposed to what is doing well in the Kenyan market, but it's actually exposed to markets that are doing well than the Kenyan market. And this ensures a steady return to you as the investor. And the third advantage is that dollar funds will protect you from inflation in Kenya. Inflation has been eating up, the value of money. But you'd find that while you'd use 100 shillings to buy a whole packet of milk and bread, right now you actually can't buy both, you only buy one. So when your investment is in USD, you're protected from that. Your money is not being eaten up by inflation. Okay, so with those advantages, now I'm going to narrow down into the advantages of a dollar money market fund. Specifically, money market fund, but now in dollars. And the fourth advantage is that they offer capital preservation. When you put in your initial amount, you will get your initial amount plus interest when you actually withdraw your money. The fifth is that they are very liquid. Within 3 business days for most of them, after withdrawing your money, you receive it in your bank account. The sixth, I hope I'm counting well, is that there are usually no entry fees or no exit fees. The main advantage is that they earn you passive income through compound interest. Okay, your interest for January will give you interest in February. Your interest for August will give you interest in September. Okay. So I'm going to explain why the Kenya shilling has been losing value, and it's not just the Kenya shilling that has been falling. Actually, almost all the developing countries' currencies have been falling against the US dollar, and this is why. So there has been global inflation, and this means that prices have been increasing everywhere, not just in Kenya or not just in Africa, everywhere. So to curb this, the U.S. Federal government has been increasing its interest rate. When the central bank increases its lending rate, that is the interest rate, that is the cost of borrowing, less people will borrow, or rather, the price of borrowing or the cost of borrowing will go up, meaning people will borrow less. So when people borrow less, they have less money to spend, which is called disposable income. So they have less disposable income. It means that their ability to spend is lowered. So with this, the demand for goods goes down. So when the demand for goods goes down to match the supply, the prices also stabilize or they go down, because inflation is caused by a higher demand than supply for goods. So the U.S. federal government has been increasing its lending rate. And now with investors seeing that actually when you lend money in the US you're going to be paid more, investors withdraw their investments from developing countries to actually invest in the US, where the rate of lending is higher, so that they can get a higher return. So with this pulling out of your money, when I pull out from the Kenyan market, I will need my investment to be converted into USD so that I can invest in the US market. So you find that there's a high demand for the USD in Kenya. So the high demand for the USD in Kenya leads to a currency appreciation, or makes the USD to gain value because it's in high demand. So it makes the USD to gain value against the Kenya shilling. And that's why the Kenya shilling actually has been depreciating, like many other developing countries' currencies. The second reason for the Kenya shilling falling is actually imported inflation. Okay, so we are a net importer as Kenya, meaning that we import more than we export. So when it comes to importing, let's say we're importing from China, we're importing from whichever country. Of course, we're not gonna pay them in Kenya shilling. We're gonna trade in the common currency, which is the USD. So when the prices for what we're importing are high, it means that we need more USD to bring in, to be able to afford those goods, okay? So this creates an increased demand for US dollars. Let's say an example, in August we need 1,000 US dollars to import oil into Kenya. But now because of inflation, the price of oil has gone up. So now we need 2,000 USDs to import oil. So we need more USD, creating a higher demand for USD. Okay, and this will cause the value of US dollars to go up, and then our Kenyan shilling depreciates. So that's another reason. So the third reason is the high cost of servicing our dollar-based debt, or our dollar-denominated debt. Now I'm going to give a list of the requirements that you need to invest in a dollar fund in Kenya. And the first, for identification, you need your ID or your passport. Second, you need a colored passport size photo. A recent one will do. Third, you need your carry pin or your carry pin certificate. And fourth, you actually need to have a dollar account. Okay, you need to have a dollar bank account in order to be able to invest in a dollar fund. So they don't deal with Kenya shillings, and when you convert your Kenya shillings into USD, you need an account for that. So you need to open a dollar account with a bank of your choice in Kenya. Last, you need to fill the registration form. It's sent via email. Now that you have the requirements for opening a dollar fund account in Kenya, I will take you through the process. And the first thing is that you need to select the unit trust that you want to invest in. Previously, I have done a video on the criteria to use to select unit trust, so I will link it here for your knowledge. Secondly, you need to now reach out to them through mail or through phone, and now they will explain everything. After that, you will be required to fill the form and share all the documents, and then have an account opened for you, and you're free to invest after that and start protecting your portfolio from currency depreciation. So I will mention two dollar funds in Kenya that you can actually do more research on and determine which one you want to invest in. And the first one is CIC Dollar Fund. It's a dollar money market fund, and the characteristics are that the minimum investment is $1,000. That's the minimum initial investment, and then the minimum top-up investment is $100. As of the making of this video, they offer a rate of 5%. And the second one is ABSA Dollar Fund, and for ABSA their minimum investment is $100, and they do not have a minimum top-up investment. As of the making of this video, again, the return is 3.44%. Use those as a kickstart in your research for dollar funds in Kenya. Please always make sure you do your own research and your own due diligence before putting your money anywhere. And that brings me to the end of this video. Thank you so much for all your support. Thank you so much for all of you who have subscribed. If you haven't, please subscribe and also put on the notification bell and share the video as wide as you can. Thank you so much for watching, and I will see you in my next video. Bye.